What if? Well, there are a few questions that have come up a number of times, not all that often, but enough that I thought I would address them here. One is, can I get a policy that is fully paid up in just 10 years or 20 years? Or do I have to pay premiums forever? Another is, does the Mecha limit increase over time? And can I load in extra cash into my account anytime I want? Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. Now let's address the question of early paid up designs. Yes, there are policy designs that have the entire policy paid up in 10 years, 12 years, 15 years, and 20 years. There's also a design that pays up at age 65, just about whatever age you start the policy at. And those policies do grow the cash value pretty quickly when designed properly, but they limit the options for customizing the policy in later years of the policy and for loading up the cash value. You see, with the maximized design, scheduling premiums to be deposited up to the age 100 and scheduling the cash growth accelerating riders for the maximum number of years, it opens up the maximum number of options. For example, one of the easiest and least complicated options for loading in additional cash value is to prepay the term rider portion of the policy. On the shorter premium paying designs, that option is taken off the table when the premiums are no longer scheduled. Including the longest paying period for that rider also it allows for reducing the required premium at any time in the life of the policy. And that's because you can reduce or even eliminate that rider anytime. The same is true for the paid up additions rider. That is, you can reduce or eliminate that scheduled rider and thereby reduce the scheduled premium. But another nice option with that paid up addition scheduled rider is that you can actually miss paying for that rider and then make it up later. If you don't pay for that rider for a couple of months, it won't adversely affect the policy. And again, you can make it up in future deposits. There's also the option to stop paying in premiums altogether. Should you decide later in the life of the policy that you no longer want to deposit any more premiums, you can exercise what is called a reduced paid up option. And that means that the policy will be reduced in face value or death benefit to the amount that all the premiums that you have deposited up to that point has paid for in full. The face value will be reduced, but the cash value will remain whatever it is at that point, and that cash value and the face value will continue to grow from there by means of the dividend interest paid to the account. And there will be no more premiums required for you to deposit. For use with the Infinite Banking Tax-Free Cash Growth Warehouse strategy, the Mecha limit is the limiting factor with regard to loading up the cash value or overfunding a policy. MEC, M-E-C, stands for Modified Endowment Contract. When a policy becomes a modified endowment contract, it loses the tax-free growth benefit, and that's one of the greatest benefits of this whole finance strategy. You know, you can have your money growing tax-free and use it tax-free at the same time. So you don't want to lose that benefit by exceeding the Mecha limit. The MEC limit is determined by the total face value and by the minimum premium requirement for the specific policy. The MEC limit is the total amount that can be paid to the account, including the required premium deposits in any 1 year without triggering a modified endowment contract and losing the tax-free growth benefit. So the question comes up, does the MEC limit increase over time? Well, actually, it does to a limited degree. Another term for MEC limit is 7-pay rule. There's a test that is called the 7-pay or 7-year test that determines if a MEC will be triggered by a certain amount of deposit to the account in any 1 year, or how the account will be affected by a particular deposit over a 7-year period. It's complicated, but as the total face value of the account grows, those numbers do change. And so the MEC limit does increase slightly over time. Finally, can I deposit extra money into the cash value anytime I want? Well, it depends on when you want to. There are some limitations. It's easier to schedule extra deposit amounts into the design and miss some than to not have those extra deposits scheduled and then want to dump them in. I mentioned prepaying on the term rider premium as an easy, uncomplicated means of loading in cash value. But while it is an easy and uncomplicated method, that option is restricted to a 60-day window of time around the anniversary date of your account. So if your policy was issued on the 1st of November, for example, you would have from October 2nd to November 30th each year after the second anniversary of your account in which you may prepay the term rider premium up to the MEC limit for that year. All that is required is, one, an application to prepay the amount you want to pay in, and that will provide an official 7-pay test to determine whether the amount that you want to prepay will trigger a MEC. And two, your signature on a form that documents the deposit, where it's going, and how it will affect the account. And finally, of course, the actual deposit of funds to prepay the rider. Simple, uncomplicated, no examination or health questions. Now, if you want to increase the face value while you load in additional cash value, you'll want to apply for an unscheduled paid up additions rider. That consists of a one-time deposit of funds, which will buy additional whole life insurance, increasing the face value or death benefit, while at the same time increasing the cash value by the amount you're depositing. This method of depositing extra into your cash value also is restricted to the 60-day window around the anniversary date of your policy. It also requires an application, which will trigger a 7-pay test to determine if a MEC will be triggered. But in the case of paid up additions, the application will also include health questions and a paramedical exam with blood and urine samples, along with height, weight, blood pressure measurements. The additional requirements are to make sure that you're still insurable and for the amount that the addition will include in the new increased death benefit. Again, it's easier to schedule planned paid up additions in the original design, even if you have to miss some of those planned additional deposits. Planned paid up additions can be scheduled for up to 3 times a year and for several years. Being planned and approved at the time of issuing the original policy lets you skip all the additional exams and questions and applications. They're scheduled. And if you miss a payment on the scheduled rider deposits, you can make it up later. Bottom line is, this is not like a savings account at a bank. And good thing too. Yes, it's a little more effort and planning when it comes to making extra deposits, but the benefits way outweigh the restrictions. Your money earns massively more dividend interest, tax-free. You can leverage all your cash value without being taxed on it, and while all your money continues to grow with the compounding dividend interest. And your money is protected against anyone, even the government, from attaching or freezing it. Now, if you found this video to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. Or if you'd like a free copy of my book, Tax-Free Cash Growth Warehouse, 178-Year-Old Secret, that link is also in the description box. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to become or apply to become a client of ours, the link to the application is also below. We're here to help, and we look forward to helping you. For now, aloha and mahalo for watching.